Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. It's now time for our cash tag segment. Joining us here in studios, TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Landon Swan is with us as well. We're talking some Under Armour here. This is a stock that has had peaks and valleys, I will say, over the past year and some change here, Jenny.
Yes, that's a good way to put it, because it is up over 3.5% this month so far, but it's been in a pretty consistent downtrend since actually its last earnings release. Now, they do report their second quarter earnings tomorrow before the market open, and actually management is projecting pretty strong earnings with their expected revenue growth of 70% year over year. And the street is forecasting actually earnings of about 5 cents a share on revenue of just over $1.2 billion, which would signal about 120% profit growth year over year. So strong expectations there. Now, like its competitors, both Nike and Lululemon, it is really committed to sort of investing and enhancing its product offering while also digitizing sort of its overall strategy. It's been really focusing on sort of strengthening its brand, whether it has different endorsements with different famous athletes, making now golf shoes, I think even improving their golf shoes in a time when golf has obviously been super popular, while also sort of building out its DTC business like Nike, which is sort of, the DTC darling. But their international business has also been a strong point, up until recently, and I'm curious to see this report if actually its international business will end up being more of a headwind, with some of these stores sort of not opening internationally as quickly as expected due to some of these different pandemic virus, headwinds. But I have to say there are some positive things going into this report. It recently posted more than 2,300 new jobs, while also hiking its minimum hourly wage by about 50% to $15 an hour. And analyst coverage on the stock is also pretty positive, with a high price target of about $34 a share and a low of $22 a share, which is actually above where it's currently trading. Cowen also added the stock to its best small and mid-cap stocks picks last month. And then we got some noise out of Baird, which is actually what our first tweeter today talks about, which says, Baird names Under Armour a fresh pick. Under Armour has underperformed Nike by more than 40% over the past 3 months, despite a favorable operating environment, which has supported accelerated 2-year growth, margin upside, and favorable second-half orders/backlog for many brands. So I sort of liked this, that it highlights the fact that Under Armour clearly has underperformed Nike. You could just tell looking at a year-to-date chart. And our next tweeter does actually compare Nike and Under Armour. It was sort of hard to get away from that comparison, which was all over Twitter this morning. So our next tweeter today says, looking forward to Under Armour earnings. Nike had a huge beat. Retail is packed daily right now. This is a big quarter for their turnaround. So I have to say, very, very positive noise on social media this morning. I think a lot of people actually like the fact that the stock has seen sort of this recent correction this year. And again, I mentioned it's been in a downtrend for the last few months. So Landon, I'm curious to see what your data says, because I have to say that, the price activity is not exactly promising, but the noise on social media today was positive.
Yeah, I think that investors know that last year was a very down year. You're talking about a 70% increase year over year on revenue expectations. But you got to remember, 2020 last year was extremely low. So a normal quarter for them is, the 1.2, 1.5 billion range. Last year, there was 700 million. So it's really easy to go year over year and crush comps, but they're actually expected to decline on a quarter over quarter basis. So I think that there's a little bit of concern that maybe the consumers are not as frenzied about buying their products as they were in the past. And you can see from our purchase intent data, we've actually got them at very low levels on purchase intent. So doing poorly there. Even their digital demand is actually pretty low. So obviously a huge boom when everything was locked down. You can see it there on the chart. But of course, that's been falling off. You'd hope to see something like that stick around, change behavior. That's something that we always talk about. But it may have just been a big pull forward in demand where people wanted to buy those more, leisurely type clothing, and because they're staying home. But now hopefully they're getting out more, and they're not buying those, and they're kind of fulfilled their needs for a little while. You talked about Nike. The one kind of positive on Under Armour is their happiness. They're very strong with consumers. Under Armour and Lulu are about 77% happy, whereas Adidas is at 68 and Nike's 61. So Under Armour and Lulu both doing extremely well on the happiness level, but the demand is what's concerning. And you can see it here. Purchase intent has been decreasing for a while, a little bump in 2020 during the lockdown as people, ordered online, but it's at low levels right now. And long term, we see this as a pretty concerning prospect for the company. Short term, I think we're actually pretty neutral. We've got them just a little bit bearish on the earnings, but overall, long term, pretty scared of this company's potential reports in the future. And I think that the data here shows that.
All right. In the famous words of William Wallace from Braveheart, I'm going to pick a fight, Landon. So here we go. You are looking at a company that has done a horrible job in 2018, parts of 2019. But their resurgence has begun. I want to know, because your data is relatively negative here for Under Armour. But last quarter, what was your data? Because they killed on earnings and revenue last quarter, and the stock surged. And here's my fear about what's going on in Under Armour right now. You had June 24th, you had a big, huge beat out of Nike and a big pop in the stock. You guys reported that Crocs was a big beat a few weeks ago and a big pop on the stock. Soon after that, we traded on midday trade Skechers that had an 8% pop on the stock. So if footwear and athletic apparel overall is doing better, how is Under Armour set up for a big comeback? I mean, still got a long way to go, still not even in Nike's category, but they've started focusing on e-commerce instead of Dick's and Kohl's, and they're starting to turn it around, and things are getting better. And last quarter, they had a huge beat on expectations and a 69% rise in e-commerce. North America sales up 32%. So this is a company turning it around. It's slow, but they are turning it around. And Landon, so what does your data say about last quarter versus this one?
Right. So that's a great point. So they actually had a pretty decent numbers last quarter, especially if you look at how well it carried over from early or from middle to late 2020. So the demand was still sort of there. Pretty good comps, I think, last quarter. But what's interesting is, so, always like to look at how strong is our data on this company, not just, are we bullish or bearish, but how predictive is it? Because there's a lot of factors that go into how often people tweet versus whether they actually buy. And so one of the things we looked at is what is the correlation between purchase intent and revenue. We do this every time with companies. Under Armour's is a 0.47. So if you're familiar with stats, that number can range from -1 to +1. 0.47 correlation is average strength, right? It's not extremely predictive. It's not terrible, but it definitely has a positive correlation. So a decline in purchase intent is definitely concerning for the company overall. But again, you got to remember, look at their comps. I mean, they plus 70% year over year is going to be really easy to beat those numbers from last year. They're expected to lose versus last quarter. And I think that all the expectations are going to be elevated because of all the things that you're talking about, all the footwear that's doing well, Nike doing well. And so I think investors have very high expectations for this one. So, we're not officially strongly bearish on this earnings report. I'd say we're neutral to maybe just a tiny bit bearish, but more neutral than anything. I just worry that expectations are going to be really high, and the huge beat on year over year comps, that's not fooling anybody. Everyone knows that's priced in. And so I just worry that anything other than just crushing it could be very disappointing for investors.
I hear you, and I think there's a lot of factors on this this earnings release in particular, Landon. So I think it's a tough call to make one way or another, particularly with what we saw last week out of some of the mega cap names. It didn't really matter what they posted. In many cases, it wasn't enough. So I want to talk to you a little bit more about the long-term prospects of this company. And you said you're a little bit concerned, and I think I share some of those same concerns, and I'll lay this out. And I'll preface it with, I own a couple pieces of Under Armour apparel, and I love them. I think they're really high quality equipment. The product is great. But there's a phrase that says out of sight, out of mind. And 3, 4, 5 years ago, there was a lot of corny commercials for Under Armour where there was guys yelling, "We must protect this house." And I remembered Under Armour a lot. I would go to the local sports department store, and maybe if I was going to get a new pair of shoes, I would consider getting the Under Armour shoes because they were on my mind. But now behaviors have shifted, and I don't go to the sports department store more often than not. I go to Nike.com or Lululemon.com. And the strength out of something like Lulu and Nike, which we've seen in their growth, isn't benefiting names like Under Armour the same way it would have back in 3, 4, 5 years ago, 10 years ago, where you did your shopping at Foot Locker. And if you went there looking at a pair of Nikes, they might show you a pair of Under Armours. If I go to Nike.com, last I checked, they don't show me Under Armour products there. So is that kind of where all of this stems from, Landon? That they benefited from us going to shop for something else, and then we saw it, and then now we're just going straight to the source and we don't see them anymore?
Right. I think it's tough because you've got companies like Nike and now I would argue Lululemon that are becoming far more common, even household names. And I think you're right. Under Armour was on that track. Like they were gaining popularity years ago and becoming just more common and common. But just anecdotally, I agree. They just haven't been on my mind when it comes to buying that kind of clothing, athletic or athleisure. So I would agree with that. And I think that the direct to consumer approach, Jenny talked about it earlier, Nike dominates there. They absolutely are crushing it. And if you're going to Nike.com, of course, they're not going to show you Under Armour. And with malls, I mean, maybe we're reopening, maybe we're not, knock on wood, I think we are. But that's critical for a company like Under Armour who has to tag along with other people's demand. And the more that the consumer is not going to a Foot Locker or a mall where they're looking at a lot of different brands, the more difficult it's going to be for a company like Under Armour. So I think that they've got to do a better job of getting out there and getting in front of people like you're talking about. I think this could be a marketing challenge for them because Lulu and Nike have crushed it and they are dominant in this space, and Under Armour has fallen behind.
Landon, we'll leave it there. Good stuff. I'm looking forward to this report to see if they can continue on their strength of recent, but I think a bit of an identity crisis maybe in Under Armour. Maybe they're working on repairing that a little bit. The co-founder of LikeFolio.com, Landon Swan, always a pleasure.